Hi, Chris Duff over at Serious Land Capital, vacant land funding partner. So today, I just wanted to go in a little bit more depth about some of those deal updates I'd provided end of last week, specifically about that lakefront lot in Georgia that ultimately we decided to take an owner finance offer on it, but lined up a note buyer to exit us out of the property so we could fully get back the cash that we were anticipating and not have to be stuck potentially collecting payments longer term. Obviously, it's always the pros and cons. Collect a whole bunch of notes. You can create consistent cash flow. Your overall returns can be higher. You have to be careful, net of inflation and general costs running your business. But generally, that's going to be the case with appropriate interest rates versus exiting out sooner with table close, selling the note, or potentially seasoning the note a bit longer. So in our case, and similar for most funders, we're always looking to get our cash out ASAP, since the level of acquisition activity and the cash that we need on hand is more significant than most other businesses within the land space. So the way that we strategized for this one, you have a whole bunch of options. Like some folks say, I can just take owner financing offers and, either hold the note or think, okay, maybe I can sell it or maybe list it on PaperStack, for instance, but you're not entirely sure who your buyer pool might be or how long you might have to season the note. So to me, I would rather reverse engineer the terms of the owner financing so that I have a table close note buyer ready. And so we can just cash out of the deal as if it was a cash deal. So, assuming your asset is of high quality enough and that you can meet the note buyer's terms they request, generally you can expect to exit at about 80 cents on the dollar for the total sticker price of the deal. So in this case, for this lakefront lot we had in Georgia, initially we had negotiated up to a $90K cash offer with $50,000 that was going to be provided via cash and the remainder via HELOC from the buyer. However, the buyer's HELOC fell through. So then he had initially proposed owner financing, now had to go back to that option. But because we were, going to consider it, but then we had to, again, reverse engineer our anticipated exit, with a note buyer cashing us out of the deal. So, if we just stuck at that same, $95K cash price, but had to owner finance, our total return is going to be significantly lower. So, it's pretty common knowledge. Generally with owner finance deals, you want to have a higher price than just a cash deal whenever possible to, account for some of the inherent risk, or if you're looking to sell the note like we would. So, I just tried to quickly reverse engineer, adding 20% on top of that 95K, which is like roughly 114,000. Said, okay, we could do this owner financing, but we want to exit at roughly the same amount. The buyer came back at 110. You're like, okay, it's still a little bit lower, but I still want to exit this deal. We've held this asset for longer than I would like. So, we're going to be short a few grand from what we were anticipating at that 95K cash price, but it's not much. So we can accept that. And then going back to my note buyer, and what really helped here too is that we had the buyer was willing to do some down payment. So that de-risks the property significantly for a note buyer. They normally would request a credit check. In this case, they were willing to waive it because the down payment was so significant, nearly half the value of the property. And so got their interest rates terms, the max length of years they were willing to underwrite the property from a note holder perspective, and willing to waive a prepayment penalty because the buyer was requesting that. So we lined up all of those terms, and then also confirmed with our note buyer, hey, here's the asset, confirming that you can cash us out at 80% of the value of this property. And because we knew them well, I'm like, yeah, I'd like to exit 90K roughly. I could be more satisfied with that. So if we just took 110 and 20% off of that, it ends up being at 88. So we were actually able, our note buyer was like, hey, yeah, I can get you up to 90. It's okay. So it was more of a relationship play from that perspective, and it helps us feel a little bit better because you also have to account for the commission that, assuming you're using a realtor, is being charged on that total sticker price, not the value that you are being cashed out of the deal from. So that naturally would cost a bit more. We were about to pay 6%, $1,000 cash. Now it was going to be on 110,000. So it's a bit more significant. So we also went back to our broker and like, hey, just so we can eat a little bit less pain here, do you mind if we adjust the commission to be associated with that exit price that we're anticipating, roughly 90,000. Just, going back and forth with the brokerage, they weren't able to do that, but we were able to negotiate just a point off of the commission instead. And actually we had them at 5%, so it was even a little bit better. So we got them down to 4 total there. So that roughly equates to what we would have expected from a commission payment based on the total cash out value versus the sticker price. So we're always trying to be mindful of that, and if you can save a couple grand here and there from a property, it's just worth asking, especially if you have a better relationship with the realtor and hopefully bring them more business in the future there. So that's the way that we handled that piece. And then we just got all the terms that the note buyer was expecting. We translated that over to an offer sheet for the buyer of the property. And we still had our LLC as the note holder via a seller finance deal. So we don't actually have to bring in the note buyer to overcomplicate the deal. We just bring them in at the time of close with the closing attorney. So then they can provide all of their various paperwork, and it's effectively a double close situation. So you basically assign over the note, we get cashed out of the deal upon closing, and then the note transfers over to the note buyer. So pretty simple process from that end. Reduces the complexity a lot, so long as you can reverse engineer the terms beforehand. So to me, I would always try to get that type of aligned whenever possible versus like taking the risk. Am I gonna potentially have to wait for longer on paper stack? Do I really know the buyer pool for these assets from a note buyer perspective? I would rather reverse engineer and get squared away, even if it is possible. Maybe I could get like a little bit better rate on paper stack, or maybe I couldn't meet the terms that the buyer was wanting in relation to note buyers that I know. So then you have to consider other options potentially. But in this case, we were able to effectively get this done within 24 hours. Make an adjustment, and we were signed on the offer, ready to close with our attorney, and exit this deal in less than 30 days. So at least from a closing perspective, again, we've held this one for several months, had to take it off market, then back on market. So not my favorite asset at the moment, but it's still going to be a favorable return for us, probably even better than I was expecting compared to a couple months ago. So just wanted to share how we structured this one, and hopefully this helps you utilize certain strategies and tactics in your own business. I'll let you know how things go when we actually close out of this one. We also had a prep and amortization calendar for the buyer too, so just FYI, you can have your note buyer prep that as well. And that was just one other piece to mention there. But we have another possible owner finance deal that we're going to take a look at as well. But hopefully this was helpful. If you're looking for funding, seriousland.capital or Land Daily Diligence Facebook group for zero cost review of your land deals, and landpricer.ai for the most accurate and simple way to price land. With that, take care, subscribe, and share. Bye.